and thanks very much for joining us for the first in a series of discussions we're planning with investors on the investor mindset, nature or nurture. I'm Adrienne Hall. I'm a founder of the Wealth Creation chapter at SACC, and part of why we exist is to create and attract a dynamic community of investors, entrepreneurs, and innovators who are committed to responsible wealth creation and sustainable growth. And I'm delighted and honored to welcome Grant, who's also part of our investor circle. And Grant has made a significant contribution to exactly that, wealth creation and sustainable growth. Grant is a South African with 30 years experience and now supports CEOs and founders to turn vision into scalable reality. Grant, welcome. Thank you for joining us. Grant, I thought I'd kick off by asking you what you see as the defining opportunity that launched your career as an investor.
I think for me, the defining opportunity was when I decided to break away from working for the corporate. So I worked for Citibank and for ABN AMRO. I was the vice president in both of those businesses. And it was quite difficult to extract from there because sitting there as a VP, had all sorts of things, and a PA and an office with a Persian carpet and blah, blah, blah. And I suppose the big thing was to kind of decide to get out of that and become an entrepreneur. And for me, it was just actually saying, yes, I'm going to do that and being fully committed to it and then actually just doing it. So that for me was a defining moment. It wasn't about making money. For me, it was about challenge and growing and getting to the next stage and learning really.
So, Grant, what aspects of your mindset in your journey do you think came naturally, and which aspects did you have to learn the hard way, managing risk, all the kinds of things that make a successful investor?
From my point of view, I had a bit of a military background, so very process-orientated and very disciplined. And I suppose that's kind of where my mindset sits, and it remains like that now, is kind of get onto something and get it done. So you've always got to, it's like sailing a boat. You've got to have a destination. If you don't have a destination, where are you going to go? So it's always that. So it's always around having the destination and navigating towards the destination and attempting not to deviate along the way, So that's where lots of things go wrong, where there's too many deviations. Stick to the plan, stick to the routes, and get there. Same as military. You go for the target doesn't change. It stays where it is. Same in business, the target generally remains where it is, if you've properly thought about it and defined it.
So if you were training somebody to be an investor, Grant, where would you start?
Okay, so the start would be you've got to invest into people, basically. For me, that's the first thing. It's all about people. It's 100% people. Any mistakes that I've ever made from an investing point of view has always been around people. So the first thing has got to be chemistry between the parties. You've got to be able to, when I say get on, you don't have to become besties, but you've got to be able to work with them, mutual respect for them as a person, and also for what they can actually do. And it needs to be likewise. So it's all about people and trust. People always use that word very, very glibly, but in business, lots of us trust, because that's where it's all built. So people just need to be able to be honest with each other and say, this is what's happening, this is where we're going, and what we're doing. So for me, 90% of business success, or probably even higher, maybe 95, is all about the people that are in the business.
Grant, could we talk about something that you mentioned to me about really quite a seed event, but in a different context to today, which was when one of the founders of Investec invited you and a team of people, I think it was 3 or 4, with a seed fund of 50 million, and you turned that into 2.8 billion. Yeah, that seems an extraordinary journey, and I wondered if you wanted to share that with us.
Yeah, there's lots of learning lessons in there. I can give you the journey. So basically, the chap was called Earl Grauman. He was one of the founders of Investec and a major shareholder. He'd been a customer of mine for many years, and he approached me one day and he said to me, I'm sure you're tired of being an investment banker. We want to start a new business, and we've got 50 million seed capital. There's another 4 people we're going to get to join you on this journey. And are you interested? I said, well, what are we going to do? He said, we don't know. There's 50 million that needs to become 500 million. And I said, so precisely what are we going to do? He said, I don't know. He said, you're good at raising capital. So that's probably what you're going to do. And I said, what are you going to pay me? He said, you'll pay me a little bit more than you get now. And you'll be part of you'll be a shareholder. So between the 5 of you that they're going to be, you'll share 50% of the business and we keep the other 50. Are you interested? So I said, it sounded quite appealing. I mean, there's no job description. It was completely different. You know, having come out of Citibank and ABN AMRO, where everything's completely process driven. You got a job description, all that. I took it on, and what a journey, you know. So we learned an incredible amount. The other four people, I didn't know who they were, but on the first day we met each other, we knew each other, we had faced each other in the market, worked together, done lots of things. And we then decided, because the first week we just sat and looked at each other, didn't know what to do. I was the only Gentile, they were all Jewish. And the first Friday we went to the shul. Our guy that was the chairman, he spoke to all the mates, family, friends of the shul and said, here's my team. They got 50 million, they want to invest it. Who's got ideas? So as Monday arrived, the phone wouldn't stop ringing. And so we kind of grabbed our first deal. That was a company called Corpcom, which became Corpcom, was an outdoor advertising company. We were all out of the investment banking environments. None of us had ever done anything, didn't even know what an outdoor billboard was other than looking at it. Never done a deal in that space. And that was the start of our journey. So I literally went off to Standard Bank and I bought the business for R1 from Standard Bank. I did it off of compromise with creditors, all sorts of things. And we built it. 6 months later, we listed it for a cool 460 million. So I'm giving you the fast version on that. Those were 22-hour work days, lots of learning along the way, where we made mistakes, and some of those cost us dearly in terms of time and money, was all around the people. And that's where I learned you've got to really assess what you're doing, you know, and also the changing environment. It was an environment that was changing. We had to stay on top of it. But yet again, it was, you know, everybody wanted to distract us, including other people, the people that donated the cash or lent us the money. They kept on coming to us and saying, do this and do that. We said, no, just stay away from us. Don't talk to us. Go away. We're on our path. We know what we're doing. This is what we're going to do. And we set it up very quickly. We said, basically, we've got a company that's broken, it's underperforming. That's step one, is fix that. Step two is, as we're fixing it, which other companies can we buy and gobble up, which are undervalued? And where can we change staff where we think the staff can be improved? And how can we fix up every single process in the business? And we then just said, okay, the only way to do this is similar. How do you eat an elephant? You can't eat it in one gulp. You've got to break it up into little pieces, which we then did. And there were lots of tasks and different things. And we then allocated that out to all of us, had a piece to do. And we didn't stand on each other's toes. You had to actually do your piece very specifically. We didn't have many meetings amongst ourselves because we didn't need to. It was all in this. We wrote a document, and that was the blueprint to do it. We met once a week, mostly over lunch on a Friday. And we then say, okay, where are you? And all the rest of it. And it was I like to refer to those as a come to Jesus meeting, because it was, you asked to do that. Have you done it? Yes, no. Binary questions, not going off in a platitude and saying, you know, this is why I haven't done it, or a whole lot of other nonsense that came into it. So eventually everybody got into that discipline. If you come to that meeting, make sure you've done it, because otherwise it's going to be very embarrassing. So we kind of put that together. We listed the company. So as I say, 460 on the day. We then started building up our next business, which was involved in refrigeration. All the aisle fridges that sat inside Woolworths and Pick n Pay and the like, we rented those out and manufactured them and did a whole lot of stuff, and cold storage for butcheries and things like that. Also, we had a whole lot of defunct businesses, very disparate businesses doing lots of different things. And we kind of bought that and completely restructured it as well. Enormously challenging as well. So that was in an engineering / retail environment. We all had experience in that, but not on the ground engineering, not on the ground retail. So, you know, you couldn't be smart ass. We had to climb in and really learn about those businesses properly. Yet again, it was also making sure we surrounded ourselves with the right people. We then did a hostile takeover in South Africa of a company called Fulcrum Science and Technology Bank. So that was a Barry Swart initiative. He had raised the listing of that business and promised the market a whole lot of things. The cash component of the business was worth R5, and the share was trading at 240. So one of the guys that sat on our board, Jeff Libesman, a very clever guy. Jeff was a Jewish businessman of the year for 3 years on the trot, which is no mean feat, and a really, really clever guy and quite a nice guy. Anyway, Jeff came up and he said, we need to buy that business like now. So if you're going to acquire 75%, it would be a hostile takeover, walk-in fire management takeover. We've then bought ourselves at least R5 worth of cash for 240. So that was my project. Did that, put it together in 3 days. We owned 75% of the company. Walked into Barry, fired and got rid of it, and then we turned it into a derivative trading house, and started then recruiting people from all over the world to get it growing. That was an exceptionally successful listing. I won't go into the figures because they're just too big to tell you. But we did super well out of that. So in terms of what we paid and what we floated out at, and that then formed a different business for me, where I became an entrepreneur for a second time round. The business has kind of stabilized between Corpgrow, Corpcom, Corpbuild, all of those businesses settled in quite nicely. I then approached the shareholders and I said I wanted to start a new business inside the business and become a vendor for a second time round. And Eric Illeride and I were very close. He was also one of our guys that lent us the money. And I started a microfinance business at the time when the rest of the market was collapsing. So what had happened is African Bank had payroll deduction codes, and those were cancelled. They had to then collect the money in the normal way. And I went to the microfinance head on against everybody. Lots of them were being liquidated and failing. Tutukani, which was a Sambo thing, African Bank itself was battling. And I then built a business. One man in 1 year, around 900 people working for me, 5 MDs, FDs, all building us through mergers and acquisitions. We yet again the same path. I chose a very good team. I went and opportunistically bought companies with super good people, and we put proper processes inside there.
So, Grant, what's the first thing that you look for when you're evaluating an investment opportunity?
People, the management, who's going to run it? That's the first thing. I can't do it all. So you've got to have a look at the people around you. And if you can't, if you can look at the industry as well, if those people aren't good enough, but you like the business, can you actually headhunt into that? Can you then do a management buy-in potentially, or a management buyout of the existing people? You also want to incentivize people that are in that business as well. They need to get to work every day knowing that they're part owners of the business, especially at executive and senior decision making level. So everybody needs to be on the same page. So for me, that's the big thing. So any investment I go in, I first meet the people, make sure there's chemistry between us. I must like the industry as well. I don't want to do something that I hate. It's got to be something that I'm really interested in. And you've got to be curious about the industry, curious about the people, curious about the customers. You've got to learn it very quickly. And then as you know that and start learning, then you can climb into it and start adding value. So as an investor, you have to add value to the business that you invest in. So lots of private equity people talk to that, but then what happens while the business is still little and they've got 2-3 companies that can do it, but then they become 30 companies overnight and they can't. They're very thinly stretched. So all the things they promised to do in the beginning, they don't. So even in Corpgrow, Corpcap, Corpcom, we often fell foul of that, in that we promised people we would be there every 5 minutes to do everything for them. And sometimes we weren't because we were just too busy on the deal. And the deals become all consuming. And we then learned to actually segment what we were doing and actually brought in professional managers to do professional management things. So us as a deal making team carried on doing deals, and we had professional managers in the business running them. So we still managed it because they were our kind of things. So we did what we had to do. But for me, it's always, even today, so I don't know if you want any more questions around that, Adrienne, before I go into the new world.
Well, I just want that before I did want to ask you about the macroeconomic factors that influence decisions and the current environment. But the one question I just also wanted to ask, also for people who might be looking for investment and who want to make investment, what is the biggest red flag that will make you walk away from an investment opportunity?
People that don't understand what they're presenting to you. It's always about the numbers. You've got to be on top of the numbers. It's like if you watch Dragon's Den, where lots of people get stuck, where they can't talk to the numbers, where they say to them, what is your profit? What is your revenue? What's your forecast? Where are you looking at it? And just to explain it all. Who are your shareholders? Where have you been? What's your journey? That all needs to be like 100% accurate. So it's like being interrogated. You have to be so prepared for that. And whoever's presenting, particularly every single founder. So even if the founder in the team of founders, the marketing people, the sales people, whoever sits on the founder team, they need to be very, very close to the numbers, because that's what it's all about. That gives the investor confidence that potentially he could be repaid with a return.
Okay, that's it. And so Grant, if we could get now onto the issue of the macroeconomic factors, because we clearly working in a very volatile environment at the moment. So it would be good to get your perspective on that. As an investor working in that environment, and then looking at, how that might affect entrepreneurs as well as other investors.
Yeah, that's a very important point. So right now, I mean, in the world, with what's happening from certain global leaders, Mr. Trump and the like, there's stuff happening which nobody can control. You also can't pin it down. You really don't know. but there are still certainties in the market, and you kind of work around those certainties. So macroeconomics is quite a big thing. So if the business could be affected by tariffs and things like that, then you need to be able to, wouldn't say you don't invest, but you need to manage it. So you need to have a look at your risks and assess it. So it's all those kind of things. So if you're involved in anything that's being transported right now, I can see there's major impacts. And with some of my customers, the cost of shipping a container across the world is just insane. It's gone up. The oil price spiked. It went up to, we involved in one of our businesses in oil trading. It went from 500 to 1,000 overnight. Extremely difficult to manage that. How do you actually do that? We've got orders coming in and just the market going absolutely crazy. So it's all about, you really got to look at it very, very closely. You got to sit down and see what the impact is going to be on the business. And as they say in the classics, sometimes where the world dishes out lemons, you've got to make the lemonade, because the opportunities come out of that as well. So often there's major opportunities. We see them because we pick them up and say, okay, that's where everybody's going. You can't be a sheep either. If you follow like a sheep, you'll become like a sheep. You'll eventually be slaughtered. So you got to think slightly outside the box and see what you can do. Sometimes you can't. And also you need to know where to stick your hands up and say, I give up. I can't do this anymore because the macroeconomics have really gone against us. And then you decide what you would do as an exit strategy out of that. So macroeconomics is vital, absolutely vital. You need to be on top of it. So you need to watch the news and see what's going on, but not depends on the news that you watch. So it's pointless watching GB News in the UK or BBC. It's not that relevant. You need to watch Reuters and Bloomberg and see what's really happening in the world. Can't watch Trump's social, whatever the social thing that he's got, Truth Social. It's just bullshit. You need to look at the Reuters, Bloomberg, look at what's happening on the major indices in the market, the daily gold price, the fuel price, and all of that kind of stuff.
And for people, Grant, who might be working in the startup space, before they've got something they want to take that's scalable, but they're crafting the raw idea, and they're looking for investment on a smaller scale.
Yeah. So my biggest advice, and we get involved in those transactions, before you even start anything, who's going to buy it? Who's your customer? Have you approached your customer? Are the customers you got in mind? So often guys think it's a great idea and they start developing something, but who are they going to sell it to and who's going to buy it? So if you start off with that first, all the business I ever look at is it's all about the people and the customer. Without a customer, you've got nothing. The customer is at the center of everything that you do. And when I talk about customer, the people, if you run a business, those people are your customer as well. All the staff that work for you are customers. So everybody has to be served properly. So my biggest thing is around that. I always start off, and the market has changed a lot. Venture capital and private equity has taken a bit of a turn for the worse over the last short while because of macroeconomic events. And I'm starting to do lots of deals in the corporate. So I'll give you an example of it. We've got a customer that's developed noise cancelling headsets. You put the headset on, and the noise cancelling comes through the mouthpiece, not through the headset. So that's for special ops military and for people in ambulance, police, and those. It's not really call centers. It can be down the line. It can be there. Customer approach, needed money. I said, you don't need money because you haven't got an order yet. You need an order. Once you've got the order, we can finance you. And we do that. So we went out and we got an order for him for just under 9 million. That takes his business to the next stage. It's, for them, for the entrepreneur, it becomes an expensive deal because we don't do that for free. But we fix lots of things as well. We sort out the manufacturing. In that case, we wanted to manufacture in the EU, including and the US, including the UK. Too expensive. We're now manufacturing. The pricing on the manufacturer was going to be 500 per unit. We're getting the same thing manufactured in Vietnam for 50. So, it's a big difference. It affects the product price and all the rest of it. And around the end of that, we kind of put the whole deal together. So as I said in the beginning, there's a plan, and how do we execute against that plan? And once we do this, we kind of teach people. So that market's changing. So there's lots of deals I'm busy working on at the moment. And lots of them got the similar dynamics where we say, you need to understand, who's your customer? Have you sold to them yet? And if you haven't, why not? Maybe we can give it a go. And if we can't, then we just know that the product's flat. You need to, somebody must buy it. And it's got to come up with a reasonable margin. They can't say, well, initially we'll do this, we become price predators. No, you must be able to make money on the product from the first day. Otherwise, you're just wasting your time. So I think there's lots of opportunities. The other opportunity is AI. We're busy acquiring independent financial advisors at the moment, and we've got an AI tool that does the upfront valuation for us very quick. So the potential person that wants to sell his IFA will come on. It'll give him a very quite an accurate valuation of his business that would be prepared to pay for him. That also goes to our financiers, so everybody gets the information at the same time. And then we use AI as an enabler to be able to streamline the business. make it better, simpler, faster, better, and all the rest of it. So AI is just an enabler. We're not an AI business. We're still fundamentally an RFA business. So it's also just having your definitions of what you do. So I think AI has created amazing opportunities for people. Because now, as a solo entrepreneur, you can actually you can say you've got 50 people working for you if you're using AI properly.
Mm.
So the
So Grant,
major opportunities for people to become entrepreneurs. They just need somebody to literally lead them a little bit.
well, Grant, I wanted to ask you if you could give investors, before we open our questions to the floor, if you couldn't give investors a 5-point checklist before making an investment, what would they be? I think you've covered them all, but if we could just distill it into sort of 5 points.
So for me, let's see if we can get too far. But the big thing is first the people. Go assess the people. Step 1. Step 2 is actual product. Is somebody going to buy it? Where is the competition for it? Ideally, you want some competition in the market because otherwise you're the only one out there shouting into the wind. 4, can the thing actually grow? What's your compound growth rate that you can actually get out of it? So it's back again, it's all back to the product. And then 5 is yet again, it's actually, where does it grow? Can it go global? Is it, and can it spin out into other things as well? You don't want to, you can have a monoline business, but the thing needs to be able to do other things because otherwise all your eggs in one basket. You've got concentrated risk. So you just need to, it's all about risk assessment, all of it. But for me, it's all literally, Adrienne, in my experience and where I've made mistakes, and I've made a few of them in my journey, is around the people. Every single time. It's giving me a headache and I've lost money and I've lost sleep and got less hair and it's gone grayer. It's because of people issues, all the time.
I had
And be bold. You've got to be bold.
Yes.
So as an entrepreneur, you need to be bold. So they always say to people, you need to wake up every day and put your big girl panties on and just go for it,
I mean, can I just a quick question on that?
Yes.
Sorry, just because we're talking.
No,
so
sure.
Grant, on that, on the people issue, is it because sometimes it's instinct thing. Do you feel that sometimes you overrode your instinct with the head and said it sounds good, I'm going to go ahead, and then you failed, or do you feel that
you do, Sven, 100%. You need to take emotion out of it. So I've done not recently, 3 years ago, I completed a master's degree in the UK on executive mentoring and coaching. That has helped me a lot because I've now got a model that I use that I put myself through and put the people that are potentially going to work with, put them through the model. And that model will then tell me whether I was making myself or not. As much as it's also got to temper me back. It's got to, I've got to use that as a learning thing.
I mean, I suppose also that's going to just the fact that does it reiterate your initial instinct? So it makes you feel better. Okay, my instinct was right. I shouldn't go with this person because I think and I always tell people that, actually, weird enough, we usually have good instinct.
Yeah.
But we overthink things and then we override our instinct, and that's usually when things fail. And I think that's, and I think maybe networking, connecting with people like of the same ilk, that's how you start getting a sense of people.
100% correct. Absolutely right.
And Grant, when you're looking at an opportunity, how soon would you expect to get returns?
It depends. I'd like to return the next day.
But if somebody was making a presentation to you, what would you sort of expect for example, for a startup looking at a scalable opportunity?
Yeah, it depends. We don't want too long. So the longer it is, you're just wasting time. You're just burning cash. So kind of 6 months or so, you need to start seeing something come through. Otherwise, investors don't like doing that. Investors hate putting money, including myself. I don't like putting money into salaries and marketing and stuff like that. I don't. I'll put my money into like a sale. I want to get a sale. That's what I want.
Okay, so could we open questions from the floor from people who would like to ask?
Just put your hands up if you want to speak. Anybody? No hands up yet. Don't be shy. So it's a friendly room. Grant is very friendly.
Yep, very friendly.
Well, I think that's what our investor circle is about actually having a community of people that you can feel you can ask stupid questions to and feel safe asking the questions.
I mean, what I'd say as well is that, Grant, from a perspective of AI, I mean, you can get through lots of rubbish now. If you've got the right system, you can just say, put it through and say, it can actually kick the tires for you. So I suppose even as a as an entrepreneur looking for investors, you can do the same. You're like, is it worthwhile? What am I thinking correctly? I mean, it's
Correct. Correct. So AI, it's as with everything, it's the same in the murky world of mergers and acquisitions. It's kind of what we're more or less talking about a bit today. It's rubbish in, it's rubbish out. So AI is exactly the same. You need to treat the AI back again as though it's a person, because that's how it's been built up. So in a sense, it needs to know about you. You need to say to the AI, this is who I am, what I like, what I don't like, what I look at, and it needs to know that, so it can hone in on what you're looking at, and then you can give it models. You can say, these are the models that I use in my business to do assessments. So I use it very effectively, and every day I do. I mean, I spend quite a bit of time on AI doing stuff for me, but every day I spend a conscious time on educating my AI about what I needed to do.
I mean, just on that, I don't think people also appreciate it's not as easy. So I think the fear of AI, people must calm down, because it's not easy. It's a process that takes time. I'm spending days and hours now trying to train my AI to learn a few things about me, and create an agent to do things. It's not an easy fix. If you've got lots of money, you can throw it at a problem. But we have a question from Ivan. Ivan, you can unmute yourself.
Hi. Hi, Grant.
Hey, how are you, Ivan?
Yeah, I'm good. You?
Yeah, good, thank you.
Awesome. Yeah, interesting talk. I have a question. Let me switch it. And the question is this: a lot of people talk about investors and being great investors and stuff. And I coach and mentor business owners here in the UK and internationally. And I do some work in Africa. And as soon as you mention Africa and investment, we kind of part the Red Sea there. And I've found a lot of investors are interested up until the point where you mentioned the R word. There's a little bit of risk involved. What are your views? Are there any pointers that you would say one needs to consider when looking for investors, say, let's say, as an example, a company here in the UK looking to set up some roots in a particular country in Africa? We found the right people. We've got local population on the ground. There's a little bit of risk involved, but the rewards are looking quite good. What would you say, or what are your thoughts on looking for an investor to be part of that, number one? And number two, just in general, the challenges with being an investor on another continent?
Yeah, that's a very interesting question, Ivan, and a super good question, actually. So it's back to the same old thing again. So very few private equity investors or venture capital guys will go into East Africa if they haven't been there or not there already. Sometimes they might dip their toe in as a first start before they go. So often in those transactions, if I'm looking for an investor come in, I look for somebody that's in a similar industry, that actually knows the industry first, can add value and can do things, and maybe what's a footprint in Africa. They've got to have a vested interest in wanting to be there, and also patience. Africa is a place of patience. So I sat on the board of Telesure. I'm sure you guys know Telesure. They own Auto General, First Women, Dial Direct, etc., etc. I was on that board for 4 years, did all their M&A stuff for them. And I spent a lot of time in Africa, and I didn't close one deal. Spent a lot of time in Nigeria, lots of failed due diligences. Some places you got to walk away. It just won't work. It's just too far. It's just too disparate, and you just can't change it. It's impossible. That all comes back down again to numbers as well. You start going to the numbers, and the numbers haven't been properly audited unless it's been done by a Big Four. And I'm an ex-partner from Deloitte, so I suppose I kind of look at things from a technical point of view and that basis as well. The deals can be done, but you've got to understand Africa is a different place. And in Africa, you must build a relationship first. You've got to take the time to do that. You've got to know about the people's families and all of that kind of stuff before you even talk about business. And then you can break a bit of bread, and then slowly but surely you then start building a relationship and start talking about it. And then you've got to get honesty and say, okay, where are we really? And you've got to test the market. So I've done some successful and some unsuccessful stuff in Africa. There was a chap that we did some work for in the DRC. He wanted to go and sell white goods in the DRC that he was going to import from Turkey. So white goods would have been dishwashers, washing machines, tumble dryers, and all those kind of things. And having been up to Kinshasa and to Lubumbashi, we said to him, you're going to go bankrupt if you do that. For the simple reason, the power outages, they're in and out all the time. The quality of water is shocking. So your insurance claims and your warranty claims will be massive. We strongly suggest you stay away from the market, leave it to the Turks. They can do it directly themselves. That was the first business. The second business, he wanted to start a truck rental dealership up there as well, not only selling the trucks for big brand trucks, MAN, Volvo, etc., etc. The roads are absolutely shocking. They're broken. And yet again, we said to him, by the time you wipe, you know what, out of your eyes, your warranty claims, insurance claims will be through the roof. Go do something else. We then bought a mobile company for him. So it was a lot more gentle, just collecting the recurring revenue every single day, every single month. And that's what we did. So Africa, you could do it, but you've got to go in with your eyes wide open. I have done deals in Africa. They do take a little bit longer, a lot more patience. But also in Africa as well, is the people are very entrepreneurial, and they're actually quite bright. You just need to work with them, and you need to get them on side, and you need to help each other, basically. Is that the African thing we refer to Ubuntu? Ubuntu is very prevalent in Africa, and you've got to have the principle of Ubuntu. You know, it's different. There's give and take a lot more than in a say UK market, for instance.
Yeah, no, thank you very much.
But very exciting, Ivan. You know, so just got to do it. You know.
Yeah. I mean, I grew up in South Africa, so yeah, I understand the issue of just now. So
just now, no, yeah, exactly.
Yeah, I mean, I think, Grant, I think it also comes back down to the whole thing about people, and I think that's also why a network like the South African Chamber, what we're trying to do is, you know, it is the softer route into Africa. That's what we're trying to do, because I think it's about everybody knows somebody somewhere, and you can reach out and say, look, help me, you know, because I think Africa is scary for people who aren't African. So I think, you know, this is there's a lot of interest, as you said, Ivan. So I think, you know, this is how we can help as chambers, as other Africans, to help people get in.
Yeah, I think there was a fantastic event that the chamber put on a couple of months back in London, where some leaders that came across from various countries, and it was incredible just to speak to them and to see the level of excitement and energy that was in that room generated by these people that really want to do well. So we do business in Africa. So I've got smaller business that we do. It's a really, really tough environments, but we kind of learned it. And I must say it's okay, you know. But people want to go there, rip the ring out of it. Don't do that. Africa doesn't give that. You know, you make your million slowly, not fast. The way it is.
Absolutely. Yeah.
Thanks,
okay.
Ivan.
No, well, thank you very much.
You're welcome.
Barbara, you've got your hand up.
So hi, Grant.
Hey, Barbara.
Hey, my question, with a startup in its early stage, so making an early stage investment, at what point are you starting to consider your exit strategy when it may not be that apparent right from the start? And what would your criteria be for this?
As fast as possible. So generally with these businesses, you need to look at your exit as you're busy designing it. So you're going to say, who's my customer and who am I going to sell to, how they're going to pay me, when they're going to pay me, and how much they're going to pay me. And once I build this monster up, who can I sell it to? So, and included in that is a very, very, very important thing, because then you know who the players are. And often those players will also give you a place to go to for your funding. So that's incredibly important. In everything we did in Corp Grow, Corp Cap, to build the business as quick as we did, our exit was omnipresent, literally omnipresent all the time. We knew we were going to do a listing. Some of the companies we couldn't list, and they'd have to go out for our trade sale. We spent a massive amount of time in the beginning of the deal actually putting that together and really understanding it and interrogating it. So it's super, super important that. And I hear what you say. Sometimes it's difficult to define it up front, but it needs a lot of, you really need to think about it properly.
So you've got that North Star guiding you right from the very beginning.
Right from the beginning, Barbara. You can't, you know, it's just got to be there. It's got to be your pilot light. And that's your target eventually as well. It's kind of what you think about. Think, well, if I can build this business up into that, eventually they're going to be biting my hand off to own my business, you know. So that's really, we really need to be. And you can start those conversations quite early on as well. Not too early. You need to get to a stage where they won't do it themselves. But you need to start. You know, the investment journey is a long journey, and the sooner you start it, the better.
Great, thanks.
You're welcome.
Thanks, Barbara. I've got another hands up at the moment.
Well, Grant, thank you so much. I think that's been absolutely fascinating. And, you know, I think this, thank you for launching this series with such a fount of wisdom and practical advice. And just to say to everybody on the group that we have got this investor circle that Grant is a founding member of, and that we're wanting to grow. And we see it as a community of investors and innovators who can come together and talk informally and learn from each other and, hone their skills. So we hope that you'll consider joining us and joining the South African Chamber as well for those who aren't members. Our next event for the Investor Circle is we're going to be having an informal gathering before the summer drinks on the 21st of September, which is going to be held at Investec. So, do come along, and you can, I think we're going to have the links on the website, Sven.
Yeah, correct.
Great.
So the event will be launched, Ray. And this has been recorded, and we will put it onto the website so you can listen to Grant at a slower speed because he's got lots of words. So it makes it easier for the rest of us to catch every word. So if you miss something, it'll be there available, not today, but in the next few days.
And if you guys want to, if there's something that you need, feel free to reach out, and I can maybe give you a couple of pointers and say, this is where you go, So, I mean, I've got so many things that I work on from so many different fields, So I'm completely agnostic to what we ever look at. You have to be in this market, you don't know where the next best opportunity is, really.
You go wherever the money is.
Go where the money is. Exactly right, Sven. Exactly right.
And also just we have our last 2 events on Thursday this week in London. So if you're around, you want to join an event, one is UJ's alumni, and the other one's the young professionals. So you have to be under 35. So you decide which one you're going to.
Okay. Great. Fantastic. Thanks for the opportunity to speak to everybody, Adrienne and Sven.
Thank you.
Great stuff.
Thank you so much. And thanks to everybody for joining us.
See you next time. Thank you, everyone.
Thanks, everybody. Bye.
Okay.
Bye-bye.
Cheers. Bye.